focus is primarily on the morning hours. It takes a lot out of me just to trade and trade it well the first 3 hours of the day. So if I get the end of the day, or I can figure out a way to get a good trade in the end of the day, it's just a bonus for me. So the first thing that I want on everyone's radar this morning is that, let me verify that I have this correct, but that at 11:15 a.m. Central Time, 12:15 New York, Fed Chairman Yellen is scheduled to speak someplace. And as we know, the result has been, I haven't seen a time yet where the market has not driven straight up into her speaking. So keep that in mind if you're thinking about fading this morning. I think that's a huge caveat, and will probably keep me on the sidelines from shorting this morning. So I guess, and then at after that, FOMC member Fisher speaks at 12:25. We have the U.S. Beige Book, which is retail sales, at 1 o'clock Central Time, 2 o'clock Eastern. I'm trying to see, I think that is it until we get to the Bank of Japan for today, but that is a lot of Fed and data later in the morning, later than usual. So I think probably the peak of that will be Fed Chairman Yellen speaking. Interestingly enough, after she's spoken, we have sold off the last couple of times. So again, that puts us right into New York lunch, which really sucks, but that's how it is going to be. And early in the morning, let's see, at 7:30, FOMC member Stein was speaking. At 10 a.m., it looks like we have no econ coming up at 9 a.m. Central Time, 10 a.m. Eastern. And then at 9:30 Central Time, we have crude oil inventories. It's been a long time since crude oil inventories have affected the NASDAQ or the S&P, so I'm not worried about that, obviously, unless you're trading crude. So let's kind of jump into today. So first of all, I'm not looking to fade this morning, outside of a possible scalp, but generally acknowledging that Yellen's going to be speaking at noon, and that generally the expectation has been for positive results. Now, so what's the risk to me deciding to do that is the first question that I would want to address, which is this. If I'm choosing not to take shorts because she's speaking, that means that I may end up having the zones work perfectly, getting rotations off of each and every zone, and end up going, I missed all that, and then getting no significant, just getting a 2-point rotation down, not getting a big enough rotation down to get a long entry, right? And all of that could be very frustrating. It could mean that I end up with a big old zero on my chart. I would like everyone, because there's been some questions over the last couple of days, who at least is new to the room or been in the room consistently. My objective is only one thing: to find 1 or 2 trades a day. Okay, if I can find nothing out of my scalp trades or nothing else, 1 or 2 trades a day that put profit in my account and let me consistently grow my trading account. And when I start off with a new trader, and the most critical thing is that you don't have these massive swings up and down, and that you add equity P&L to your account on at least a weekly basis, if you can't do it on a daily basis, okay, and that you don't take significant drawdowns through your learning curve. And if you'll do that and you'll have a plan for increasing trading size over time, the P&L comes quite naturally. And then once you master a basic trade, you add a second trade that's perhaps a little more aggressive and let you stay a little bit more active. So that's a general premise behind what I'm doing. I'm not trying to call trades out or be a trade caller necessarily, and I'm not trying to be Superman of calling, hey, we're moving from 1900 to 1800 in this period of time. It's just not what I'm good at. I can't do that consistently at a high win rate, so I don't bother with it. So that being said, let's go through the basic objectives and what we're looking for this morning. Let me get my drawing tools real quick. Okay, so what I'm looking for at each zone is first time to the zone, a pause, and then a rotation lower. As soon as I'm done with the executive summary, I'll go through yesterday's charts, right? And I'm not necessarily even trying to capture each and every support and resistance point. I'm actually trying just to capture the ones that I think, now the more that I've thought about it, I'm more and more leaning towards simply leaving the zones off that I think have a higher odds of being busted easily, and simply leaving them off the charts. And what that means is zones like yesterday's 1814 to 1816 were simply completely off the chart, meaning there was a zone there and I left it off because of the price action that we had. So I'll be moving more and more towards that concept in the zones that I'll be trading. So the idea is first time to the zone, we get a pause, rotation lower, I capture my 2 points, and I'm pretty much done unless I have a trailer out of there. Okay, and that's a more advanced trade. You only need 1 or 2 trades like that a day to build your trading account. So this morning we are opening at 1847, okay, which is right just below Globex high. I imagine they're going to push it right to Globex high. Interesting, at the end of the day, ES was stronger than NQ, which still leads into the thought process that I have that NQ will actually, the range on NQ daily is going to start to contract because of the rotation out of the Ultra Momo stocks and into the ES. I don't necessarily think they'll discouple. I think if ES goes up, NQ will go up, and NQ will go up, ES will go up. I just don't think the range will be as wide as it's been. There's no evidence of that yet, but I think it's coming. Okay, so that being said, obviously, what I'm looking for out of the gate is a possibility of open drive higher, right? What does that categorize? What does that normally look like? Well, it's either one very strong bar up, right, where this is usually somewhere between 5 and 7 points higher, or a series of 3 bars up, okay? And then in either case, the first 5-minute bar is not violated. That's how you tell we're not in an open drive higher. Over the last 3 weeks, these open drive hires have actually been met with responsive sellers, which is a change in pace. I know it's throwing a lot of traders out there that I've spoken to, both professional and non-professional. They usually are expecting follow through to the upside. We haven't been getting that. I still would say, and the key reversal has actually been coming a little bit earlier at 9 a.m. instead of 9:30 a.m. However, there's not enough evidence for me to think that that's actually completely switched, and I'm still going to err towards waiting until 9:30 to try to get major swings in the opposite direction versus trying to do it at 9 o'clock. It's a little more conservative, and I may miss a trade or two, but if we develop momentum back up to the upside, it'll very quickly move back to that 9:30, and I just don't want to get crunched at that 9 a.m. time frame. Same thing with the reversals back to the upside. The predominant pattern over the last couple of weeks on both upside and downside moves has been this. Okay, where we've actually been having what's this failed range extension on both sides, right? And actually getting mirror image moves or more out of each side. It wouldn't be surprising to see that today after Janet Yellen speaks, right? And I'll explain why I think that. So initially, a couple of things. So if we get an open drive higher, this is the first area of resistance. There is another zone here at 55, 57, but it's poorly auctioned. Therefore, I moved the initial resistance zone back to 59 to 61. Also important to realize that from this area all the way up to this area is a 50% retrace from the swing high to our yesterday swing low. Is obviously a fairly brutal reversal there. Okay. Also, the other caveat is if you'll go back and look at corrective markets or even bear markets, the snapbacks or the corrections are incredibly brutal and incredibly fast, but they do not change the nature that the market's in a corrective mode. Okay, but it's what makes staying short so difficult, because the snapbacks are so hard back to the upside and so fast, just like we've had for the last couple of days. So it's entirely conceivable that we work our way up into initial resistance by the time Yellen speaks, and then we come right back down by Friday afternoon. Adding significantly to the volatility this week is options players are getting rolled left and right. They like to try to find a strike price and stick that strike price. And with this environment, that's been almost impossible. And they, particularly on the weekly options, and well, actually all the options, because all the time premiums come out of them. And so the options that, for example, you could have bought these calls for pretty much nothing yesterday when we were trading down near 1810. You could have bought the 1850 calls for almost zip, and they're worth quite a bit more, quite a bit more today. I saw several options traders yesterday that I follow and respect, and they were getting 100 to 200% returns on their day trading positions they were getting in options, and this is the kind of environment that invites that. When you have that kind of exposure, you've got to realize that these are very large institutions that have open positions in both puts and calls, and they will work very quickly they go very quickly from worrying about locking in profit to very quickly protecting their equity and making sure they don't take a hit. And that's what's going on right now. I believe a lot of this volatility is attributed to these guys moving massive positions, trying to square or trying to cut losses, depending on where they're lined up, particularly relative to the fact that we don't have Friday to finish closing out these positions. Everything has to get done on Thursday. They usually try to get everything closed out the day prior to option expiration. And so in that case, we could still see a lot of volatility today, as well as a lot of volatility tomorrow. And also, given the amount of volatility and that you have so many FOMC speakers talking today, we could still get crazy moves up and down. So be aware of that. The other thing I want to mention is in this environment, it's critical, okay, that you follow your trading plan. I spoke to several guys who really got blown out hard yesterday. Not my coaching clients necessarily, but just people who've emailed me who've gotten blown out very, very hard because they don't have a plan to stop trading on the day after they hit X number of stops, right? Or they don't stick completely to their stop loss plan. And I just want to remind people, I know I emphasize this all the time, but it really sucks to have 1 week that's gotten out of control and have it cut your trading account in half. Really, truly sucks. I've seen a lot of people be there, and it can be devastating. It means you have to work for a long time to make it back up, because this volatility, I think, will disappear, and then you're going to be stuck back with 10 and 15 point ranges on ES to try to make your money back, and it's going to take a methodical day in, day out just to get back to break even, and it can be mentally breaking for a lot of traders. So that being said, I'm not looking to take any shorts prior to Yellen speaking. It may be a mistake, but there's simply been buying pressure every single time, and I haven't seen an exception to that. It really sucks that she's speaking so late in the morning. So let's talk about on the long side where I'm looking to get set up. My assumption is that we're going to drive out of the gate if we open at 1849 3/4, and my guess is that we're actually going to end up right here, 1859 to 1861.50, probably just as Yellen speaks. If I had to guess, it makes sense. It's a logical explanation from extension from 49 up to 61. And then my guess is once we get up here and into her speaking, we're going to get chop. If we can get a rotation back down into this level or backside test to Globex high, I probably actually, if it's in front of Yellen, we'll see if I can't get a trade back to the upside and see if they'll make a final push back to where we were. Gosh, was it last Friday? Sure seems quick, or maybe it was last Thursday, back to this 1866 3/4 in front of Yellen. That's really the trade I'm going to be looking for in addition to my scalps. So let's talk about the downside in case I'm totally insane and wrong about the market reacting to the way that Yellen's speech will be received. So let's go with the assumption that we don't break 1849 3/4 and we roll to the downside. All of this from 1841 to 1849 3/4, okay, all of this was poorly auctioned, okay? So the area that I'm looking to come into to take along will be the first touch of both Globex low, which was 1840.50, I believe, right into the gap fill. This entire area, I'm willing to take a shot. And as a matter of fact, if it's violent to the downside, I will cut my position by a third and increase my stop by a point. Okay, so I essentially end up with the same risk. I'm simply adjusting my trade size to account for the possibility of additional volatility. I don't think I'm going to get this trade, but if I do get it, I will take it without hesitation. Also, if we open drive higher, someone asked me about the extreme tick open the other day versus an extreme to the upside versus an extreme tick to the downside. And this is on NYSE tick on TradeStation. That symbol's $TICK. Because we've been in a bull market environment, the extreme negative ticks on almost every occasion that I can remember except one have been met with a response of buying. Okay. And then have actually either started a large response back to the upside or a trend day up. That is not the case on an extreme tick open to the upside because of the bull market environment. We tend to get that extreme open and perhaps work our way off a little bit, and then as soon as the tick comes in a bit, we start getting pushed higher. And so I don't trust the extreme ticks on the gaps. Also, the pattern has been, and I'm going to show you all in just a second, is on the gaps has been open up, drive up for the first 15 minutes, and then get responsive selling back to the downside, and in the last couple of days, complete rollovers back to the downside. Okay, again, I don't expect that this morning because of the pending news that's out there at 11:15. We might get a little bit of rollback prior, but really what I'd rather set myself up for is the long. And technically what that also means is that the market may actually open for real, meaning we actually get the volatility after 11:15 a.m. So it could set us up for quite an interesting afternoon. It's too early for me to game that and figure out which way we're going to play, other than to say the normal pattern has been this the last couple of days. Push ups and then push back down, and then we get a solution like that, just like over the past couple of weeks on push downs, we've been getting this, and then in the afternoon we get this. I suspect this is what our pattern is going to look like today. And my supposition is, unless Yellen says something that people really want to hear, we're going to get a downside push after she speaks. Okay, so basically my first concern is open drive higher. If we don't get open drive higher, the next area, even though this is kind of in no man's land that I will shoot for, let's assume we get an open at 1849 3/4. Let me pull up a retrace tool here real quick. Okay, so if we open up at 1849 3/4, we closed right here. Okay, that's going to pitch you about 1845 area to 1843 area roughly for a half gap. And I actually would think this has decent odds considering what we have hanging out there of getting a move back to the upside. There's no zone there, and it's poorly auctioned. So what that means is this. We still can get this reaction back up, but if we don't, there's not a lot stopping us. And even into here, really, here's the problem is that the first well-auctioned area is right in here. Okay, at 1830, let's call it 1837-ish. There's simply not a zone there. There's simply not a zone at 1836 3/4. There's simply not a zone there because I'd end up with everything stacked. What I've been trying to avoid in the zones is having everything stacked up on top of each other. So it actually, that zone looks like this: 1834.75 to 1836 3/4. So I'm going to give you all an option, something that I rarely do. I usually leave these zones 2 points wide, but if I was going to make an adjustment for that, this is how I would make this adjustment. And I haven't decided. I'll wait to see how we're trading when we get down here. I'd be very surprised if we get below this high from yesterday in the morning. But the way to adjust that is to bring this in so that you have your Globex low and gap fill, which is also, and Tuesday's high, which is also sitting back over. Oh, we went out on the high on ES. Excuse me, that was NQ. So what I would do is I'd bring all of that down to basically your zone would be 1839.50 to 1840.50, and then place a zone at 1836 3/4 to 1834 3/4. So the way that I'm treating that if we get to the downside, and I'm sorry for making this so confusing, but when we get these huge zones and they're all poorly auctioned areas, it makes it actually quite challenging to come up with zones where I can say hours ahead of time, hey, I'm taking it here no matter what. So now that I've thought this through, I probably actually will do this. So what I'm going to do is I'm going to amend this zone like this. So I'm going to make the zone, let's just call it 1840.50 to 1839. Okay, and then the zone below, I'm going to add a zone here at 1836 and 3/4 to 1834 and 3/4. And just so you know, before I did this publicly, this is exactly the process I would go through, uh, you know, basically talking to myself and going through and making sure that what I'm saying fits logically into what could happen in terms of where the market structure is. Okay, so the way that this would work down here, I would, like I said, expect the first time in responsive buyers here, but then it's quite likely, since it was so poorly auctioned, to actually come back in, test in here, find responsive buyers, then get back above and trap. And if that occurs, a push to the upside. Now that brings the second question is, well, wouldn't it be a trap if we close below here? It would, except that since we're opening at 1849 and 3/4, by the time we got down here, this is such a fat stretch that your stop relative to where we have to open in order to make this trap work is going to be 10 points, which is obviously an unworkable trap. You'd have to have some kind of structure or just say this trap has to work at X number of points. Furthermore, you got to remember the rules of the market still apply. When the market gets stretched, right, average rotation, the average rotation rule is going to apply, and the market's quite likely to snap back in, even if it eventually is going to continue on its way down back below. The test will be on this here, right? If we come in here, respond, we get down here, we find responsive buyers will be how it reacts here. Um, Obviously, if we push back down out of here, we know that there's no trap in place. If it comes up here and it just spends a moment or two and then gets back above, you know the trap's in play and they're probably going to make a shot back for Globex high. Again, remember, we've pretty much been doing this type of trade action the last couple of days. It hasn't been a very, it's been a great two-way market on overall color of the day, but once we've started moving in one direction, we have gotten small rotations, meaning we're getting rotations out of the zones, but the overall trend's been holding, then it's been reversing and taking it the exact opposite direction. So today that could easily look like this, and then we just end up with this as well. There's no way to tell with options expiration. I wish I could. And you're just going to have to play it off of your setups as they develop through the course of the day. And the market will tell us what it wants to do. Obviously, right now, the market's about to tell us that it wants to open up at 1849 and 3/4. So in addition to adding this zone here, what I would also do is come in, and we quite clearly had an uptrend yesterday. I would take a trend line, start it from wherever you like. This works just fine, right? Highlight it like that. If we don't get below that trend line this morning, there is no down, okay? You know that we have to penetrate below this. We're obviously opening above. And interestingly enough, again, if we do that from the close to swing high, let's say it was 1849 3/4 off the open, you'll notice that that could easily bring us right into, by the time we get here, this would bring us right into the bottom of this trend line. I would, because it was so strong yesterday, expect someone to try to step back in initially and at least pause it here, especially if it lines up with the zone. It could also be later in the morning that we line up with this. And in that case, if we came in with a half gap right there, again, I would expect responsive buyers the first time in. Remember, this is like a white line on a highway. I do not automatically take trades off of here. I really like it when a trend line lines up with an actual support resistance zone that actually means something. Okay, and then that just gives me more confidence that we could get a stronger bounce off of that level. But just like lines on a highway, right? You get a guy who's insane, can just drive over both sides, doesn't mean jack in that particular case. So on the downside, let's look to later in the day in case we do break down and where I'll be taking trades. Okay. If we get below and hold below yesterday's high, um, I'll be taking along, obviously, first time into a retest of yesterday's high. I'll take along here, take along here. I will not be taking along in between here, right? Poorly auctioned. I'll take along first time in here. This has to work pretty quickly right here, this 1824, 1826. Okay, and then I'll be taking a trade out of the white zone. If we get back below the white zone again, I will be cautious. We've made pretty quick trips below that 1820, back down to 1810. Okay, there's this 1814, 1816 zone is still there. We have zipped through it. It's not as weak as it was yesterday, but we have zipped through the zone in both directions. This is not automatic for me. Okay, it is a valid zone. It's got to work quick. I will take a long out of this 1809, 1811. Being cognizant, this has been tested multiple times. Again, this needs to work for me relatively quickly, or I'm going to bring my stops really tight, as in whatever the swing low is. Okay, and after 25 minutes, I'll be tightening that up and looking to at least scale some of it off as quickly as possible if I can achieve my 2 points out of it. On zones below, 1804, 1801, 1804, 1802, I'll take a trade first time in. 1800, I actually don't think there's very good support there. That should say 1800, excuse me. There we go. 1800, I don't think there's necessarily good support, but it always acts as a psychological point of inflection. And so expect at least an attempt to bounce off of that area. The true support is down here at 95 3/4 to 97 3/4, and then right below it at 92 94. Okay, I do think the only danger down here is if we get, first of all, if we get below yesterday's low, obviously that'll be a break of a triple bottom. So you got to think, if we break that triple bottom, it could easily set panic in to a lot of traders. And what I might be thinking is, outside of a quick bounce here, if this bounce doesn't stick out of this zone, as I said yesterday, I would actually rather shoot for this 86, 88 area than necessarily mess with this. The zone's valid. There's structure there. I wouldn't be surprised to see a bounce in this area. I would push back closer to the 92, but really this is where I'm looking. In this zone, the 1788 to 1786, I'm willing to cut my size again by a third and increase my stop by a point, meaning instead of 2 behind the zone, 3 behind the zone. Why? We tend to get large reactions out of open gaps, and that's an open gap right there. And so I am willing to play a little bit harder in this zone than in almost any other zone today. Let's go talk about the upside if we get out of control on the upside here real quick. Oh, and by the way, guys, if we open drive higher, zero tick is an option. We are not in the same market we were 3 or 4 months ago, where the market's just driving up and up and up all morning long. But that first zero tick read, and my coaching clients know what I'm talking about, is a possibility for a long entry today, given that Yellen is hanging out all the way out at 11:15 this morning. That is a possible option out there. So let's talk about the upside here real quick. By the way, half gap trade, by the way, is an aggressive trade, guys. I want to make one last note here, and this is specifically to my coaching clients. If you're going to take the half gap trade, reduce your trade size so that if you take a stop on that trade, okay, you can still execute your trade plan through the course of the day. Don't let it throw you, okay, and say, well, I'm not taking any more trades because it got busted. You've got to acknowledge, hey, this is an aggressive trade. I have higher than normal odds of getting stopped on this trade. I'm going to reduce my trade size, and if it's a profitable trade for me, great. If it's not, no big deal. I'm going to move forward and continue to take my trade plan. Trying to cherry pick which areas will work and which do not work leads to tremendous loss in confidence. You end up tending to pick the ones that are harder and missing the ones that are easy. Okay, so on the upside, obviously, Globex high is in danger here out of the gate at 823. I'm not keen necessarily. I'm not keen shorting on any of this prior to Yellen speaking. Quite frankly, I'm just hoping for a rotation back down so I can catch a long. NQ's been weaker than ES. How will we know? So let's talk about, since I'm not taking shorts this morning, let's talk about how will we know things have gone south on us. Okay, well, first of all, we will quickly trade back below Tuesday's high and not be able to get back above. We know the picture's changed. We'll get back below this trend line. We'll know things have changed, right? I will not be trading the trap trade off of Globex high today, again, because of Yellen. I'm just willing to forego that this morning. Instead, I'll be working for the half gap and seeing if I can't catch the half gap for a move back to the upside. And then post Yellen, okay, I'm willing to take a short at initial resistance. I'm willing to take a shot at last Thursday's swing high. Really, all these zones above, all the way up to the high. I'm willing to take a short trade out of. This area is extremely poorly auctioned as well as this one. These zones specifically have to hold, and I would really want to see rejection. I would cut the time if we get up here for some insane reason, but it's options expiration. I'm cutting the time down to 15 minutes. These zones up here have to work in 15 minutes. My concern is if we get up here, as the options traders have been busted, and they don't give a damn about zones, they will do whatever they have to do to get their risk off, and it could cause just an ugly short squeeze. I sure hope that doesn't happen, but it's possible. I really don't think we're going to get up here, but what I think doesn't matter much. So that's my game plan this morning. I really want to look for a rotation lower to see if I can't get a trade back up as Yellen approaches towards that 11 o'clock, a move back to the upside, which is what I think is going to play out this morning. Let me see. NQ. Let's talk about NQ really quick. What I'd like to actually do is take a quick look at the volume profiles, and then I'm going to jump off here real fast. Okay, notice again, this is important. High, low, we're right in that 1849 to 1859, 50 to 60% back. Okay, extremely common to get responsive sellers in this area. It's just going to be the timing of when do we get these responsive sellers step in. Also, if you measure it this way, from Thursday's swing high to Monday's swing low, again, the 1837 was the 50% retrace, and then the 1844 1844.35 is the 62 back. So also something to keep in mind is quite often when we've busted a 50% retrace that it's not uncommon to have. This one's obviously more important. It comes from a larger time frame, but it wouldn't be odd to see us come back in and then push back up to the back here. And it's also not uncommon to see us push just slightly behind that 61.8 retrace and then roll over to the downside. There's plenty of examples of it if you go back and look at the gold market, or even if you look back here. Let me show you the NQ trade really quick. A couple weeks ago. Here we are. Okay, high, high, low. We pushed a little bit behind it here, as you can see. Then we rolled over to the downside. Then once again, from high, low, we pushed a little bit behind it and then pushed again to the downside. And if you do that same pattern again, two things. First of all, on the most recent swing right here, and if you want to go from the highs, so on NQ, I'd have two areas marked off. Obviously, 35, 22, 87 is going to be key in this area somewhere when you look for structure. And then again, this area right here, this 36, 05, 07 area is where we rejected out of multiple times from the bottom side. It wouldn't shock me to see responsive sellers there. And then again at 35.70 to see responsive sellers back to the downside as well. I realize that's a long way away. Well, 35.07, we're actually sitting right there right now. So 35.22 would be this, but this 35.70, that's a pretty good another 60 points up. It's certainly achievable today. And then this would be a really big stretch back to 3,600. I will look to be a responsive seller up here as long as we don't hit this in the last hour. So that's all I have. Also on this NQ, go draw the trend line from yesterday afternoon that's holding. And then also on NQ, be cognizant of this trend line, by the way, as well, to the downside. So we are now open. And obviously we're just one tick above a Globex high, and we'll see if they can't make a push back down to the downside. Importantly to note, NQ is not at its Globex highs yet. It's still well off of it. So anyway, keep in mind, see what they do off the open, and I hope everyone has a great day. I'll talk to y'all soon.